I hope you're doing well. Smile, please. Okay, thank you. This time, we will be discussing the computation of inventory loss using the gross profit method. Just a recap or a background information that the gross profit method is used to estimate ending inventory when the inventory physical count is not possible. It is also a reminder to us that it is not acceptable for either tax or annual financial reporting purposes, as well as not in conformity with the accounting standards. Its main purpose is for the interim reporting and internal reporting. And it also rests on the assumption that the gross profit is relatively stable, meaning if there is some changes or there are additional gross profit, it is just immaterial or of small amount. Also, as a recap, in the computation of the gross profit, we will be computing sales or net sales less cost of sales, and in order to get the gross profit rate, we have to divide the gross profit by the net sales. Okay, let's move on to the sample problem. Just a tip, we have to read first the question in order for us to compute smoothly the problem, because it's like traveling. Ooh, travel soon. You'll want to know what's needed for you to prioritize and bring as you prepare your packaging. Okay, so the question is, what is the estimated fire loss on May 10, 2021? Alright, on May 10, 2021, a fire destroyed a significant portion of the merchandise inventory. Inventory of Candy Wholesale Corporation. The following information was available from the records of the company. As indicated, from January 1, 2021 to date of fire, and also for the previous calendar year, which is 2020, sales, this one, and sales returns and allowances. I hope you can see them. Purchases 378,245, and this one, purchase returns and allowances. Beginning inventory. There is also an additional information stating that the company determined the cost of inventory not damaged to be 69,738. The damaged merchandise, which is 15,000, had an estimated realizable value of 5,000. Now, according to accounting standards, we should be using the realizable value of the merchandise if ever that we are given this one as the cost. And also, since we are computing at the balance sheet date. So let's proceed with the solution. Are you ready with your calculator? Or you can just compute after the video and just join me as I compute here on my end, okay? Thank you. Alright, solution. Question. Since we need to compute the estimated fire loss on May 10, 2021, we have to compute first the gross profit rate from the previous calendar year, which is from this 2020. So in order for us to get the gross profit rate, we have to compute, sorry about the noise. We have to compute the net sales for the calendar year of 2020. Can you see? I'll move a little bit. Okay, for the calendar year 2020, we have to compute the net sales, which is this one, 530,180 less the sales returns and allowances of 5,980. Okay, 530,180, 524,200 is the net sales. You can go ahead and get your calculator too. So this will be the 100% out of the totality of the percentage that we are having. Okay, that's the cost of sales. which is of sales, which is the beginning inventory. There you go. Oh, I hope you can see. Okay, beginning inventory 120,000, 160. We have to add the purchases, which is 405,476, and deduct the purchase returns and allowances, which is in this case 110,000 in inventory. Sorry about the noise again. 111,110, and then we, in order to compute this 120, please get your calculator too. 160 plus 405 76 minus 111. Okay, total goods available for sale. Total goods available for sale is 514,526. Can you see? Okay. Less the ending inventory, which is, there is no information here. Since the date is May 10, 2021, it will be of use to use the January 1, 2021 to date of the fire, which is May 10, 2021, as the beginning inventory for the present calendar year. So we will be using 105,650 less is 408,876. So the gross profit is less 524,200 minus 408,876, 115,324. So in order to get the gross profit rate, divide this by the total net sales of 524,200. This will be 22%, so this one is 78%. Okay, yeah, 78. Alright then. And now we will be computing the 2021 calendar year, which is the main question of the problem. Sorry. So beginning inventory for 2021 is 105,650, and plus the net purchases which is, to get the net purchases, 378,245 less 10,295. 45 less equals 245, 367,950. So the total goods available for sale is plus 105,650 equals 473,600. Next is, we have to deduct the estimated cost of sales. That's the estimated cost of sales. I hope it's okay if I write the abbreviation only. So net sales, in order to get the cost of sales as this, the gross profit rate, we have to use the net sales, the net sales, the 100%, and then this one, the 78%. So net sales, which is according to the problem, it's 450,200 less 5,100. 445,000. Where did it? 445,100. Or dito na lang. Parang times 78% from the previous computation. So let me erase this one. Times 0.78 equals 347,178. So total goods available for sale less this one is, equals 126,422. Next is total estimated ending inventory. Let's label this one. So we have to use the additional information from which the company determined for the not damaged and or the undamaged, which is 69,738 less the net realizable value of 5,000. Since we already have the ending inventory or the estimated ending inventory, not damage, and also the damage, which is 126,422,9,738 minus 5,000 equals 51,684. Yay! Oh, it's not clear. 51,684 pesos is the estimated loss. Estimated inventory loss. Okay, I hope you can follow through. Right, this one you can go over the computation. If ever that you have questions, you can just ask me and we will be explaining what you want to know in detail about this problem. Okay? Alright, I'll be ending this video now. Thank you for listening. Take care.